Hello everybody, welcome back to another video. I hope you're all doing well and having a great day. In today's popular news, something unexpected has made headlines. I'll explain why this is significant. In a notable step towards transparency, El Salvador's National Bitcoin Office, known as the NBTC, has launched its own mempool space. This new development allows anyone to view the country's Bitcoin treasury holdings. Mempool has supported this initiative by providing a custom instance of their open-source project for the NBTC. This move significantly enhances the transparency and auditability of El Salvador's Bitcoin treasury. To give some background, El Salvador became the first country to officially adopt Bitcoin as legal tender a few years ago. There are numerous videos and documentaries on YouTube showcasing the utopian developments happening there. However, one issue that isn't really an issue is the lack of transparency regarding El Salvador's Bitcoin holdings, which wasn't as open as some people would have liked. We've entered an era where many people expect complete transparency about financial holdings, similar to those YouTubers who display their entire investment portfolios and bank accounts. While some companies like MicroStrategy do share their Bitcoin holdings, often as a flex rather than for transparency, others choose not to disclose this information, which is entirely their prerogative. This reminds me of an interview with Will Smith a few weeks ago. He was asked about his net worth, and he found the question intrusive, likening it to a random person on the street asking about one's bank balance. This expectation for full disclosure is unrealistic and not always necessary. A few months ago, El Salvador announced its plans to mine Bitcoin using geothermal energy from its volcanoes. When they mined their first Bitcoin, there were discrepancies about the exact amount they held, leading to discussions on Twitter about their transparency. However, it's important to understand that El Salvador isn't obligated to disclose their holdings. The main point of Bitcoin and the crypto space is to provide economic freedom and privacy. Recently, El Salvador decided to respond to these transparency concerns. According to the newly released data, they hold 5,748 BTC, valued at just over $352 million. This move is aimed at enhancing transparency and accountability in managing the country's Bitcoin investments. In conclusion, while the call for transparency is understandable, it's crucial to respect the privacy and autonomy of entities like El Salvador. The focus should be on the positive aspects, such as their innovative use of Bitcoin and the benefits it brings to their economy. So yeah, the news about El Salvador's Bitcoin transparency has been widely discussed. To be honest, I think people should focus more on their own lives rather than what others are doing. Has anyone found evidence that El Salvador misused or lied about their Bitcoin? Did the president ever promise to be completely transparent about their holdings? Now, El Salvador has disclosed their Bitcoin holdings, mostly because people seem to have too much time on their hands. Moving on, there's other news that's often presented as monumental when it's really just straightforward. For instance, Turkey is preparing to introduce a new law to regulate crypto assets. This legislation aims to align with international standards and reduce risks associated with crypto transactions. The Capital Markets Board will enforce strict regulations on the licensing and operation of cryptocurrency trading platforms. For those who haven't kept up with Turkey's crypto scene, cryptocurrency is hugely popular there. It's not just big, it's enormous. When you look into it, you wonder why major news outlets aren't covering it more. Turkey's obsession with crypto is partly due to the severe devaluation of their local currency. The Turkish economy has faced hyperinflation and worsening interest rates, pushing people towards crypto as a safer investment. Turkey's economic situation has been deteriorating, and the government is now trying to regulate the booming crypto market to stabilize things. Their economic choices have been poor, and now they need to control a market that has grown out of necessity due to the country's financial instability. Turkey's economic situation has led to some unusual developments. Despite the collapsing currency, the country still promotes its sunny weather and beautiful beaches, attracting tourists. There are numerous videos and news reports of people from places like Dubai and Singapore visiting Turkey to shop for luxury goods at a fraction of the price. Tourists can stay in 4- and 5-star hotels for around $200 a week, which is great for them but devastating for the local population struggling with inflation. This dire economic situation has pushed many Turks towards Bitcoin as a hedge against inflation. The news about Turkey's new crypto regulations is being presented as a positive development, but it's important to understand the context. The government aims to align with international standards and reduce risks, but it's also about controlling money flow and monitoring transactions. Many people are using Bitcoin and stablecoins like Tether instead of the local currency or even the US dollar, which poses a problem for governments wanting to maintain control over their monetary systems. Turkey's economic instability, with an inflation rate of 69.8% and interest rates around 50%, has driven people towards cryptocurrencies. The government's new regulations will enforce strict licensing and operational rules for crypto trading platforms, ensuring the safe custody of assets, establishing transparent customer relationships, and specifying sanctions for non-compliance. This is part of a broader push by global institutions like the World Bank and the IMF to impose anti-money laundering and KYC, know your customer regulations on the crypto space, similar to those for traditional banks. Interestingly, while countries like Turkey are now moving to regulate crypto, this could have been done years ago. It's a reaction to the growing popularity and perceived threat of cryptocurrencies. The international pressure to regulate crypto is a response to its increasing use as an alternative to fiat currencies, which are losing value rapidly compared to Bitcoin. This global regulatory push is about maintaining control and adapting to the new economic realities shaped by cryptocurrencies. Turkey is preparing to implement cryptocurrency regulations because their citizens are increasingly turning to crypto as an alternative to their rapidly devaluing currency. This situation highlights the broader issue of the declining value of fiat currencies worldwide, with many losing significant value compared to Bitcoin. Moving on to slightly confusing news, it seems like we heard this before, but apparently not. Japanese financial powerhouse SBI Holdings has reaffirmed its support for XRP by launching a validator through its crypto exchange subsidiary SBI VC Trade. Back in 2017, SBI Holdings, a significant Japanese banking consortium, was one of the prominent names in crypto. They own a vast array of companies and announced their support for Ripple and XRP back then, which contributed to a surge in XRP's price. Unlike many companies that supported Bitcoin or Ether, SBI specifically endorsed XRP. SBI Holdings had also announced plans to launch their own crypto exchange that would exclusively list XRP and use it as a trading pair for other cryptocurrencies. This approach was quite unusual at the time, as most exchanges typically listed Bitcoin or Ether as the primary trading pairs. SBI Holdings, a major Japanese financial institution, has reaffirmed its support for XRP by launching a validator through its subsidiary SBI VC Trade. This move marks a significant step for XRP adoption in Japan and reflects SBI's long-standing belief in the potential of XRP. The validator, which became operational on May 10th, underscores SBI's commitment to securing the XRP ledger network. Interestingly, SBI Holdings had previously announced plans to exclusively list XRP on their crypto exchange back in 2018. This recent development is a reminder of past discussions around XRP's prominence and the role of institutions like SBI in supporting its ecosystem. Additionally, it's worth noting that in the past, many validators on the XRP ledger were universities, which added to the network's diversity. Moving on, there's been a notable decline in transaction fees on the Ethereum network, similar to what Bitcoin experienced. Over the past 68 days since March 5th, Ethereum's network fees have dropped by 93%, making transactions significantly more affordable. The average cost of transacting on Ethereum now sits around $1.91, with basic ETH transfers costing between 18 to 37 cents. While this decrease in fees is positive news, it also highlights the scalability challenges facing Ethereum and the growing popularity of Layer 2 solutions like Polygon. Additionally, there have been discussions about Ethereum's transition to a deflationary model with its move to proof of stake.